Bitcoin has been pushing up since its big dive in March, and now it's winding up like a watch. Stay around and let's talk about this opportunity. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a triangle consolidation on Bitcoin. We'll take a look at that, but first, a few of our active trades. Later on, Tim's trading maxim and our active dream trades. Happy Monday, and the end of September is approaching. Remember to click the subscribe button and hit the bell so you won't miss any of these great trade setups. Let's have a look at our active trades. Move the stop down here to 1503.49 on Google to lock in 2011 per contract. PSAR has finally dropped below the break-even point on Bank of America, and I've moved the stop down to 25.17 to lock in this huge profit of 3 cents per contract. Half off on silver, and the remainder at break even, and now we wait for the parabolic SAR to get down here to start trailing stops. Gold triggered this sell on Wednesday, and I'm in short at 1862.40, stop loss of 1916.09, first target of 1826.61. Now it's just gone a little sideways for a couple of days, but we're still good with this. And the EURAUD triggered this buy on Thursday, and then closed back inside the range on Friday. This dashed line is where our range was. So I'm out with a tiny loss of 0.2%. I went ahead and drew the range up here at 165.90. So now we're looking for a daily candle close above 165.90 for a buy signal. And that's all the active trades for today. Let's take a look at today's trade pick. As I mentioned, Bitcoin has been in this uptrend for much of this year until it topped out up here above 12,000. And right here, we've got a head and shoulders top. Left shoulder, right shoulder, and head. Typically, a head and shoulders would be shorted right here at the neckline. And you would expect it to go this distance as far as it went in this distance. Now, without going through all the details of how to trade this head and shoulders, let's just say that this drop down right here satisfies the typical expectation of a head and shoulders reversal, and now we've got this triangle consolidation. Now, a triangle consists of an ever-tightening wind-up of the price into a triangle pattern like this. I expect a triangle consolidation to break in either direction, so I'm willing to take a buy or a sell signal from this pattern. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to buy a daily candle close above the triangle, or we're going to sell a daily candle close below the triangle. On the breaking candle, to enter a full-size position, we want to see this volume bar reach this volume average. If it doesn't quite reach the average, but does reach 75% of the average, I'll take a half-size position to reduce risk. You can calculate that percentage by taking this volume number, dividing it by this volume average. You should get at least 0.75. If you don't get at least that, I suggest you stand aside on this trade. Stop loss will be 1.5 times the ATR. The first target is 1 times the ATR. So let's say this thing breaks above the triangle and is about to close here, and say 15 minutes or 30 minutes before the close, you set up your buy order, look at the ATR, multiply that by 1.5 and measure that distance below the entry for your stop loss. Measure 1 ATR above the entry for your first target. If after entering the trade a candle closes back inside the triangle, we'll take the loss right then and not wait for it to hit the stop loss. A breakout of this pattern should be explosive and hit the target fairly quickly. If it doesn't and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. Typically, I do this using two positions. The first position has a stop loss and a take profit. That one will close automatically when the first target is hit. The second position will only have a stop loss, and that will be allowed to run. When the first target is hit, we'll have to manually move our stop loss to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on Bitcoin. Remember, my intent is to tell you how I manage these trades. If you've already got a good trade management plan, use it. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 46. No one is born a great trader. One learns by doing, again and again. And this is a paraphrase of a quote from Chef Gordon Ramsay. Obviously, Chef Gordon Ramsay's actual quote was that no one is born a great chef, but I had to spin it to apply here. This is the truth. We learn by doing things over and over. I'm sure you know the maxim that practice makes perfect, and some of you may also know another of Tim's trading maxims, number 11 specifically. Don't practice until you get it right. Practice until you can't get it wrong. You're not going to get it right the first time, or maybe even the first few dozen times you do something. But the more you do it, the better you'll become. So always practice. And of course, this applies to life as well as trading. Remember our Bitcoin trade plan for today. We're going to buy a daily candle close above the triangle, or we'll sell a daily candle close below the triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Don't forget to sign up for my Trading Picks email list to get early notification of these trading picks. The link is in the description box below. Our dream trade from a few weeks ago, Atlantic Union, or AUB, pushed way down here and almost hit the next target. But not quite. Hopefully Friday's candle here was just a breather, and this will continue to drop. Trailing stop is currently $21.77, locking in $1.15 per contract, or 95% of the entry value. Last week's dream trade, Arcosa Inc., or ACA, is still below the 50. I'm still looking for a close above this moving average for a buy signal on this one. Don't miss the Dream Trade segment on Wednesday's videos. Click the link below to find out more about Dream Trades. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. And of course, don't miss the next installment of the Trading Education series on Wednesday, when we'll be talking about hints and kinks for MT4 users. If this video helped you, click the like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great week, and I will see you on Wednesday.